Welcome to the PR Perspective, where we bring you insightful conversations with association executives, industry experts, and consultants to educate, inspire, and entertain people in the not-for-profit sector. I'm Peta Riles, founder of PR Association Services and Consulting, and I created this podcast to share strategies, stories, and expertise that can help associations thrive. I'm speaking with Richard Cholewick. Richard is an experienced partnerships manager with a deep understanding of the Australian insurance landscape. With expertise in simplifying complex insurance solutions, Richard helps organisations navigate their unique needs, offering tailored advice and building long-term partnerships to ensure smooth coverage and effective claims management. Thank you for joining us today, Richard.
Thank you, Peter. Thank you for the opportunity. Pleasure to be here.
Yeah. Well, let's start simple.
Sure.
So why is insurance such a big deal for associations? Is there any funny or surprising insurance saves the day stories that you can share with us?
Good question. I guess I have to start with the obligatory disclaimer.
Go for it.
Obviously, this is all general in nature, and anyone seeking specific advice, we can certainly provide that through an engagement with them. Associations have changed, and the focus on associations has changed over time. Certainly over the last couple of years, there's been greater focus around state and federal inquiries. There's been changes in regulatory requirements. And so when you're looking at the risks associated with associations, that will obviously have greater scrutiny as a consequence as well. Associations, by their nature, can have different structures. They can be for-profit, they can be not-for-profit, they can be charities. When you are looking at an insurance program specific to an individual association, it really is best to be tailored to the operation around that specific association, who they are, what they do, their engagement. It's best to have something tailored rather than something of a generic nature. You asked a question about insurance saves the day as a story. I'll probably go the opposite in relation to, we can all learn from others, particularly the potential mistakes from others.
Or our own.
Or our own. So others can learn from us and we can hopefully learn from others. This is one where insurance could have saved the day, and it then gives that thought around, hopefully for others to say, if I put myself in that situation, what is it that I can or should be looking at around the association that I work for represents? There was a state-based association that had been operating for over 50 years. They had an operating budget of just over $1 million and a relatively new CEO. Mm-hmm. The association had a long-term employee who managed the membership and the accounts. One day, that individual received an email from the CEO that asked for 2 invoices to be paid. There were 2 invoices attached to that email, and for the individual in question, the email looked like it was 100% legitimate. It had the right signature, it used the same sort of language that they would expect from the CEO. This individual didn't think anything of it and paid those 2 invoices because the email said, can you please address these and make immediate payment?
Yep.
One invoice was for $200,000, one invoice was for $225,000, and which nearly drained to their bank account, and this was fraudulent activity. And so you can imagine the impact that the loss of those funds would have had on the association in question. It nearly bankrupt the association.
I was about to say, it would have ruined.
But again, this is where a really good cyber insurance policy would have been able to help address this issue, both in regards to recouping as much of those funds as possible, but also then how did this happen, how do we prevent it happening, and doing some further due diligence, potential PR support. There's a number of different elements and services that can be wrapped up as part of a really good cyber policy to add value if an unfortunate situation like this happens. And it does happen more often than what we think it would. So again, this is an example where they didn't have the proper protocols, they didn't around sign off and approvals in relation to substantial payments, they didn't have a cyber policy that would provide protection around this sort of activity. So in this instance, yes, there are plenty of examples where insurance has saved the day, but this is one where insurance would have saved the day. It's almost incumbent, in my opinion, for directors of associations and others that have senior roles to look at, again, how can they identify and address the risks associated with their organisation in question.
Exactly. And I think people also expect that they can get some legal help in that aspect. But if they can't find the person who did it, there's no recovery of funds. There's absolutely nothing. There's no insurance policy, really, to be exact.
Yeah.
So that's an interesting one. And with a $1 million turnaround, that would have been...
There's nearly half of the funds out the door.
Yeah.
And again, we come across examples of this all the time, unfortunately, where somebody might then make a phone call and say, this has just happened, what can we do about it? The unfortunate thing is, again, you want to get ahead of the curve and have identified what the risks are to a particular organisation, and then how you can address or protect yourself against some of those risks and challenges. With the use of the internet, all things pertaining to online activities and data privacy, it really is one of the absolute go-to type of policies that an organisation absolutely should look to address within their organisation, or at least identify the risks, how they can protect themselves, and then where do we go from here?
Yeah, exactly. So what are the must-have types of insurances for associations, and how can they avoid being underinsured or overinsured?
There's a number of policies an association can have, and again, it should be tailored to the size of the organisation in question, the type of work that they're doing. If they have employees, workers' compensation, which is a statutory requirement, should absolutely be the first thing that they do, because it means that they're compliant from a legal perspective. The next would be association liability insurance. This is an insurance policy that is specifically designed for associations. It's what we refer to as a combined policy that provides protection for office bearers and for the association against wrongful acts in a number of different areas, or potential claims made against the association. Can cover and provide protection for misleading and deceptive conduct, I should say, breaches of intellectual property rights, fraudulent and dishonest activities, I should say, potential claims if there is perceived discrimination in the workplace, if employees want to make a claim because of actions that have taken place. There are different elements that make up this policy. It is best practice, if you've got employees, must have workers' compensation. Secondly, that association liability policy, and then work with an insurance broker who understands associations, who understands the various elements of potential exposures, to make sure that policy is structured and fit for purpose. Particularly if you're a new association, you may choose not to take out every single component of that policy because it may not be applicable based on where you are now. You can start with the things that are applicable and then add to that over a period of time. It can be refined rather than having to take out everything in one hit. It can be adjusted over a period of time. But certainly those two would be the must-have. Engaging and working with a knowledgeable and experienced insurance broker, they'll make sure that policy is structured specifically for you. Yeah. You don't want it structured for evaluation of risks or activity that is substantially higher than what you're taking out or engaging with, and you don't want it to be lower and then leave you with a potential shortfall if there would be a claim as well. So again, spending time in conversation with a knowledgeable insurance broker to understand where your business is at a point in time, and making sure that those policies are structured specifically for you.
So that would include going through their constitution, their bylaws, their operations, any structural sort of things. And so beware an insurance broker that doesn't want to look at those things.
So if an insurer doesn't have a lot of information about you, they will establish their risk profile, and that premium will be structured in relation to that profile.
Yeah.
The best thing you can do as an insurance broker is get to know the organisation you're supporting. The more information you have that you can then share with the insurer and negotiate and engage with that insurer means that you can reduce their risk profile of the association in question. If you can reduce the risk profile, that will be reflected with a reduction in premium. So it does come back down to knowledge and understanding that you can then share with the appropriate insurer.
Doing the diligence first, making sure that you're not having to do excess work later, which is actually more cost effective in general.
Absolutely. You'd like to get it right first time.
Yeah, And so many people skip that step and think that if we can just cut this section into a short piece right now, we'll save money.
But yes, a little bit of extra time up front can make all the difference later on.
It really does. Practically, it just works out that way every time. I don't think I've seen it not work out that way.
There you go.
How should they identify their unique risks, especially ones that they may not think of right away?
Associations will place a lot of trust in different advisors based on their different expertise. You would think that an association would have a trusted relationship with a lawyer who would have
You'd think
that advice, but to share the wisdom and the expertise that they have pertaining to legal matters. That same principle applies when it comes to insurance and risk as well. Insurance is a bit of a dark art. It really is a combination of legal and financial and or accounting, certainly contractual matters. And that really does require a different skill set from just a lawyer or just an accountant or somebody around finance. It would be prudent to engage an expert in that particular space. You'd want to identify an insurance broker to support you, to work with you, who has experience in engaging with and working with associations, who can then apply that expertise to you, share with you knowledge and information around what they've identified, their understanding of your business, the risks that they've identified, the potential exposures that they've identified, and then how you as an association can go about mitigating those risks. At the end of the day, the decision as to the type of policies that you take out rests with the office holders of that association, but you would want them to have and to be armed with accurate information, with knowledge, so that they can make an informed decision.
that's one of the things. I don't think they realise how much weight is on their shoulders in their responsibilities too, which an insurance broker would help educate them in that too, I think.
Absolutely.
And make them feel a bit more protected.
It's one of those things that insurance is there, and hopefully if you've got a really good insurance program, it will give comfort to the directors and to the office holders, so it's one less thing that they have to worry about and not have stress, knowing that things are protected, so that if something goes wrong, the relationships are in place, the processes are in place to be able to then make amends, whatever that is. And it's just one thing that hopefully they don't have to worry about if they have sleepless nights.
Yeah, exactly. So what's a risk that most associations totally underestimate but really shouldn't?
That would be around their volunteer workforce for the association. Associations, the lifeblood often is the volunteer workforce. That on occasions it can be ignored or overlooked around the risks or the exposures or the liability that association will have in relation to their volunteer workforce. There is an insurance policy to protect volunteer workers, and funnily enough, it's called the Voluntary Worker Insurance. And unlike paid employees that have protection under workers' compensation, volunteers don't have that. But this policy provides income protection for volunteers. And another area to focus on, again, would be to make sure that the association has the appropriate public liability insurance in place. If there is an accident, if there is potentially some negligent activity or a claim that's made against the association where a volunteer worker has been injured, they have the appropriate insurances in place to be able to provide protection for them. But absolutely, there is an opportunity to provide added protection. This is what you hope, that the insurance broker that you're working with has knowledge that these programs exist, that these type of insurances are available, and will work with the association to say, again, in understanding the association around who they are and what they do, the way that they're structured, volunteers, they would include that as part of the exposure and the risks, and would say, here's how that can be mitigated or protection can be provided, again, to protect the association, but also to protect the volunteers that want to be there in support of the association.
Yeah, that's good. Insurance can feel like a necessary evil. How do you help associations think about it more strategically as an asset rather than a cost?
Insurance quite often is thought of almost as the afterthought. It's the last thing that's on people's mind. It is quite often viewed as an expense, as a cost, and one most businesses would like to avoid.
Yep.
Our view is that it really should be viewed, as you've said, as an asset or as an investment in the business to call on if, and you hope that it never happens, but if there is a need to call on your insurance policy to address a claim or that might be made, or in a situation, for example, if an association has a premises they may be fortunate enough to own and they haven't insured it properly, if there is a flood or a fire, if they've paid, and I'm just going to use some arbitrary numbers here as an example, but if they've been paying $10,000 a year for 10 years around an insurance policy specifically for their property, and let's just say there's an unfortunate incident and it burns to the ground and it's going to cost them $2 million to rebuild, to get a $2 million return in relation to a $100,000 investment that you've made, that's a pretty good return. Some may want to avoid the cost of insurance and they view it as that cost, and it may be because they have a perception that they may be paying too much, and they very well might be. So again, it's good to review your insurance program or make sure that your insurance broker is going to market on your behalf, to make sure that if it is worthwhile to move from one insurer to another because appetite might change from one insurer to another, or if they may be if there are others out there that have a real appetite to insure associations or a particular type of policy, go with them, because it means that you should automatically get a lower premium because there's an insurer out there that actually wants that business.
But to build on that, I think that's where also the cost effectiveness of having a really good relationship with your insurance broker comes into play. Because if you're saying your premiums are too high for what you need, then they can help you adjust to what's necessary or a necessary evil for the business. But to make sure that it is playing both those fields, that it's the necessity and also the asset, and simultaneously working together, so that associations can feel a bit more comfort knowing it's tailored to them specifically. They're not paying money just so that they're covered. They're paying money to know that they're specifically covered in their needs.
Oh, absolutely. Insurance is fluid. Business is fluid, and insurance needs to be fluid. It shouldn't be just a set and forget.
Which it is for so many, not just associations, but just organisations in general.
Absolutely. You would hope would want to have more than just one conversation with their client, with the association at a year, particularly if it's renewal time, going, here's your next renewal, thank you very much, pay the invoice, and away we go.
Which is what happens.
Which unfortunately happens in many occasions. But you would hope your insurance broker would want a type of relationship and frequency of conversation that the association would have with the lawyer or with their accountant to understand what's happening operationally, any changes in focus, any changes in staff, in locations, in number of premises, in change of scope of services. Therefore, if that has changed, how have the perceived risks or exposures changed, what adjustments might need to be made? Because a lot can happen within a 12-month period. If you have the same policies without any adjustment over a 3-year, 5-year, or in some instances a 10-year period, there will be a massive shift based on where they started, where they are now, in making adjustments to not only the type of cover, but to the level of cover that they have.
Yeah.
And you don't, by making those incremental adjustments, by having an insurance broker that spends the time to get to know the association and business they conduct on a regular basis, to make those little adjustments so that the policy is always as specific and as tailored as it can be, rather than coming to a situation at a point in time, if a claim needs to be made, to find that policy is no longer fit for purpose.
Yeah.
Because it could be horribly underinsured. There could be ebbs and flows up and down, and all of a sudden, without making adjustments, you're dramatically overinsured because there's been a reduction or a scale down in services.
Which happens so often. Associations are always fluctuating in organisation and structure.
It works both ways, absolutely. Yeah. So there can be an increase, there can be a decrease. The risks and the exposures will therefore increase or decrease, and you would want that insurance program to be adjusted in relation to that as well.
Yeah, excellent. Okay. Are there trends in the insurance industry that associations should know about, like AI, climate change, and cyber risks?
Changes in climate, changes in society, how it operates, technology changes that impact the economy. All of these things impact insurance. The insurance industry will adjust to those. As an association, engage frequently with your insurance broker to be able to, again, have those conversations around how the association might be changing in its operation, or the impact may have, absolutely, based on its location or its operations or where it's operating, and technology could be an impact. And again, look to be able to make the adjustments to the change in risks that we all face.
It's funny, you don't really think about climate change in terms of insurance. From a person that's a consumer, it's not something that would come to thought for me to change the way that my insurance would affect an organisation. But it seems quite obvious. I guess it's one of those things that would be overlooked very frequently.
Well, again, based on the association in question, where do they operate? Where are their locations? Do they have premises, for example, in certain geographic areas in Australia that might be more prone to flood or to bushfires or to cyclones or tornadoes?
Is there still is it the line above in Queensland?
The 26th parallel.
Yes. Is that still applicable?
Absolutely.
Yeah.
So again, if you have property above the 26th parallel in Queensland, in northern Queensland, it can be a real challenge to get different types of insurance, particularly around properties, based on the environmental risks. It's not just residential properties. If an association has an office or other properties or facilities in different locations, they would want, and that's a hub of activity or whatever the case might be.
And they're usually national. You do find them up in Darwin.
You will want to make sure that, again, you're working with your broker to identify, in this case, environmental impact and exposures in the insurance market. Environment is one, social views is another, around discrimination and gender and all of those things. And then it continues on technology, use of AI and so forth. Insurance adjustments.
Yeah. Love it. Just the things you don't think about, really. As a consumer, you don't. What's the biggest mistake you've seen an association make with insurance, and how can others learn from it?
I mentioned earlier about getting a health check. It's good practice for an association to get an industry expert to review the program, particularly if it may have been established some time ago and it may not have been reviewed for a period of time. You don't want it to be that set and forget type of scenario. That health check around, do we have the right sort of policies? Are there policies that we should have that we don't have? Are there policies we might not need because our focus has changed? Are they structured correctly for how the business is operating? Is the cover placed with the best insurer in the market? There's over 150 insurers in Australia. They don't all do the same thing. Your broker should hopefully understand who are the right insurers to go to so that they can represent the association to place the cover with the right insurers that will give the best possible premium as well.
Does the underwriter come into consideration? Should they be thinking about who's underwriting these policies?
That would be the role of the broker around the makeup or the structure of the policy in relation to who the underwriters are. But again, the selection of insurers, the reality is most associations or any business really won't be able to check how good that policy is until they need to make a claim. When they need to make a claim, that's when the rubber really hits the road. Because somebody's definition or what they believe flood might be will vary as to what the actual definition of a flood is. But you want to make sure then that the policies are structured right, but to go back to the point about the selection of the insurer, you want to make sure that you're engaging an insurer that has a good reputation for claims management.
Yeah.
Because there are some insurers, unfortunately, that have really poor reputation in relation to their claims management process. So as a broker, you would want to undertake a health check. Are the right policies in place? Are they placed with the right insurer? And the decision around which insurer to place that with, one of those considerations will be that claims management process. Another opportunity or a mistake that you would hopefully want to avoid is making sure that the opportunity to pay for those premiums by the month is taken advantage of. And it can be a drain on cash flow if somebody decides to make those payments all in one go. But again, there are facilities available that you can spread that payment out over a 12-month period. Take advantage of that opportunity in order to be able to assist cash flow. We come across frequently somebody doesn't understand policies. They're paying for the same thing on 2 or 3 occasions, which they don't realise. They may be taking out a particular policy thinking that it may mean one thing, but it means actually something totally different. Take advantage of industry experts. Engage a trusted, knowledgeable insurance broker who understands associations. Don't leave it too late. If you are going to go to market, if you are going to review, if you want to see what else is out there, or if you want to engage another insurance broker to do a health check, don't leave it to the last minute, and by the last minute, a week before the insurance renewal is due. I've lost track of how many times we get a phone call saying...
I'm laughing because that's common.
It is, unfortunately, but the amount of times that we get a phone call saying, we've just received our renewal, or I've just actually looked at our renewal, and there's a nasty surprise, and their view is, what can we do? Can we go to market? The first question is, great, when's it due? It's due at 5 o'clock tomorrow or next week. It takes time. An insurance broker should want to get to know your business. They would want to understand the business, come out and see your premises, who you are, what you do, where did you come from, where are you now, where are you going. That is going to be a 6 to 8 week process. So the more
6 to 8 weeks.
Absolutely.
Wow, that's good to know.
And
I wouldn't have thought there would be that long, because I mean, in the instant world, you're just like, well, come on, just tell me how I insure immediately, and which is quite a big ask to put on people, but it does happen.
Absolutely, but it's gathering that knowledge. It's gathering that understanding. As I mentioned earlier on, premium equals risk. So the only way that you can effectively reduce that premium is to work with the insurer to give them more information than what they normally have, which will take time to gather and to understand, so that we can go and present that back to the insurer. And if we can reduce the insurer's risk profile of the association in question, that should be reflected then in a reduction of the premium. But that takes time. As a business, we can't insure you if we don't know you.
That's good to know. The 6 to 8 weeks is definitely good to know.
Absolutely. And as I said, don't focus just on the bottom line premium. Cheapest doesn't necessarily always mean best. You get what you pay for. So
you said they should be asking what their claims policy is like. Are there any questions that associations should just be asking the insurance brokers to vet them appropriately?
Certainly, in the process of identifying a broker, you would want to know their history in dealing with associations. Can you tell us about the associations you've worked with and the type of work you've done, or what have you done to support not only the association but also the members that they represent or those that they're working with? You would hope the insurance broker would explain, we've done this on 1, 2, 3, 5, 10, 20 occasions. Here's what we've done. Here's the outcomes that we've delivered. Here's the process that we undertook. This is what we were able to deliver for them, not just in year 1, but in the second year and in the third year, in relation to adjustments in premiums or putting together special arrangements or schemes that would be of value for the association and for the members that they represent as well. Putting structures in place, engaging insurers to be able to say, we have a volume of work, we want to be able to look at hopefully discount structure, but we want to make sure that we've got the right level of breadth, depth of cover to a particular value. All of those things take time. And again, as an association, you would want to vet the experience and knowledge of the broker that you want to engage in being able to do that. They're one of those questions, just as you would hope that the broker would be asking you plenty of questions around your business. And again, I've had circumstances where we're having business conversations. It's not just about the existing insurance program that you've got. It's tell me about your business, so that I can relate that to the existing program that you've got. The more I know about your business, the more I can validate if the program is fit for purpose, if there are gaps, if there are exposures, and so forth. It really is a two-way conversation. And again, to the earlier point, that takes time.
I love that about the time. It's not something people think of. So you've been in this field for a while. What's the most rewarding part of working with the association space?
We want to help them make sure they're protected, so things are done right, so that as an association, they have the necessary protection in place. So again, the office holders, the directors can sleep knowing they're protected. If something goes wrong, it's going to be a result. We want to be able to look at delivering a value proposition around how can we help attract and or retain or increase members that they may have. Thinking outside the square. There are quite often value propositions that a good structured insurance program can deliver as a way of even attracting and retaining members that sometimes people may not think about. So again, the more we know and understand, the more we can add value. That's key for us.
I think also considering that the associations, the members themselves are stakeholders.
Yep.
And you find that I've found associations actually put their financial reports on their website. So I think it would be very helpful to know that they have a really well-rounded, tailored insurance package as well for all the members that they do answer to frequently as well.
Yeah, absolutely. It's also what other value can be delivered, whether that be through insurance programs the association might not be aware exists. A simplistic example is if an association has members that quite often travel, maybe we can put together a scheme or an arrangement for the members around a discounted corporate travel program. That might become part of the membership fee. It might be a little thing, but it's as part of your membership, that fee now includes a corporate travel program. So you don't have to worry about going and get a separate program.
I know many board members that would love that idea.
This will be included in as part of the insurance premium.
Yeah.
As part of your membership fee, that automatically now includes a corporate travel program for you or something of a similar nature where that might be appropriate. The more that we know, the more we understand, the more we're able to look at how we can make sure that things are right, but how can we add value in whatever capacity that might be, either through what we can do in the insurance space, but also what other relationships do we have that might help to address a challenge or the problem that the association might be facing.
If you could wave a magic wand and solve one big insurance challenge for associations, what would it be?
We want to help them get it right. The association is insured with the best insurers. The policies are structured correctly, tailored for their association, and at the best possible premium. All of those elements is what we come together to call what we call just getting it right for them, making it fit for purpose.
Okay, and last, any final words of wisdom for association leaders who feel overwhelmed by insurance decisions?
Completely understand when people get overwhelmed. Leverage the experience of a trusted advisor. Spend time to get to know, identify and then engage an insurance broker that has expertise in supporting associations. And again, give the insurance broker, whoever that is, the time to get to know your business, the time to then represent you to the broader insurance market to make sure that, again, you've got the right policies with the right insurer, properly structured at the best possible premium. And that time means that the insurance broker will then be able to do the work that they need to do and then come back and present that to you so that you can make an informed decision.
I love that key point about giving them time. It's something we overlook frequently because you see online so often that, yes, you fill out questions, the insurance premium generates on the screen and you just say yes or no. And it's actually been resonating through my head constantly that yes, it does make sense to give these people more time to really tailor them properly. And I was not thinking that 6 to 8 weeks, but it's a wonderful piece of information to get it right and what time it does take so people have realistic expectations.
And the other consideration, I guess the last point around that is from a time point of view, be mindful of the time of the year as well. If you're looking to try again, leave it to the very last second around the end of the calendar year or the end of the financial year. They are the times when the insurers are at their busiest because a substantial number of businesses in Australia will have their policies renewed around that Christmas end of year period or towards the end of June or to start at the beginning of July. If you leave it to the very last second, you can sometimes find yourself in a position where you're forced to go with that again, what we've always had, because we just don't have the time, capacity to work with the broker, or the insurer hasn't got the time based on the volume of work that they've got to be able to give this the consideration that they need. So as earlier as much time as can be granted, the better for all parties.
So hit them in spring and autumn.
There is actually probably that February, March, April timeline is probably a really good time to consolidate your insurance policies and have a common date. That's probably a really good time of the year to do that, so that you can start that review process towards December or January and give yourself plenty of time when the industry has a little bit of time as well to be able to then say, let's establish that common date around that March, April timeline. That's a fantastic time of the year to do that if you are in a position to consolidate and have a common date at that time of the year, unless there is a very strategic reason that you want to do your insurance renewals at that Christmas or June timeline. Be open to exploring other timelines that might be to your advantage.
Yeah, I've noticed a lot of associations like to have their AGMs around that time for exactly that purpose with their own operational sort of thing. So perhaps just try and align it with their stereotypical AGM would be a good time to think about it and start to revisiting properly. That's really great. It's interesting to know that the time frame was really stuck with me of how much time to give an insurance broker, and I love when to visit an insurance broker too. It's interesting to know.
It is.
Awesome. Amazing. Well, thank you so much for coming and speaking to us today, Richard. It was really insightful, and I definitely want to hear more about the insurance space from now on. It's things that I just didn't think about before, and I'm really, really glad to have had your insight on this one.
Thank you. Thanks for the opportunity. My pleasure to hopefully be of some assistance and to provide a little bit of information, a little bit of food for thought. And we're very happy to support you and the association industry in general.
Fantastic. Thank you so much.
My pleasure. Thank you.